Hi and welcome back to Cheeky Crypto, guys. Today we're going to be taking a look at Bitcoin, and we're going to be taking a look at one specific indicator that is showing us that we are looking very bullish rather than bearish. Now, I have already kind of done a video on this particular indicator yesterday, but I want to go into a little bit more detail now after that brief introduction as to what it is and what it is showing us, and then I'm going to actually break down a few additional things for BTC here so that we can understand what's going on with Bitcoin and why we're seeing pullbacks the way that we are. And actually, should we be concerned or should we not be concerned? Overall, everything in my opinion is looking actually pretty neat and tidy, and we are looking pretty bullish. So I'm going to get into this and show you exactly what I'm seeing within the data, and so hopefully reassure you guys within the crypto space. If you find this video useful and informative, hit the like button. I really do appreciate that. If you are new, make sure you subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with that said, done and out of the way, let's jump down into the desktop and start taking a look at what is going on here for BTC. Okay, guys, so here we have pretty much all the data that I have available for Bitcoin, and we are looking here at Bitcoin paired up with USD. We are now looking at the weekly chart, and we are using Bitstamp as our data source, okay? So in the video that I did yesterday, we were looking at a 5-day chart, and this is just because basically a lot of people in the space look at this particular indicator on a 5-day chart. That being said, the weekly chart actually shows things in a slightly better perspective, and generally speaking, I do like the weekly charts. You'll see me use them on almost all of the altcoin charts that we do here, because it gives us a nice, good, solid base to be working from, and it gives us consistency, okay? As in 5 days, or, you know, potentially could include different days of the week, right? Whereas a weekly view shows you basically the open and a close per calendar week, and therefore we get a nice consistent view of how the market is moving, regardless of whether or not it's a weekend or not, right? So the weekly view, in my opinion, is a nice one. It kind of allows for those pitfalls with weekends and things like that, and day traders not operating and so forth. So we are actually looking here at Bitcoin on the weekly. It gives us a nice, good, solid foundation. Now we have all the information readily available to us from Bitstamp, and yeah, like I said, it's paired up with a USD. Now, the indicator that we're going to be taking a look at is obviously the Gaussian channel. We obviously looked at this previously, and we're going to go into a bit more detail on this in a moment. And before I get into the Gaussian channel, I do want to kind of talk about what we're seeing within our timeframes, because I know a lot of people in the space are calling that we're in a bear market. We've had the peak, we've done it, we've been done, you know, we're going down now, all that kind of stuff. We're going to 20K, etc. However, that is just simply not technically possible under some of these circumstances as to what's being lined up so far. I can understand people being incredibly nervous in the space, but I'm going to try to break this down as easy as I can to show you what I can see inside this data and why I'm more bullish than bearish considering our timeframes and what is going on with some of these indicators in the background. Overall, Bitcoin at the point of recording this video has had another pullback, but it is still well within lines of where we are looking. And again, when we actually take a look at those smaller timeframes for Bitcoin, we are also setting higher lows, right? So again, bullish overall, specifically longer term, right? We a bit of volatility on the smaller time frames, totally get that, and it can make a lot of retail investors very nervous. But for me, long term, looking at the chart, looking at understanding where we are heading, things are not too bad. So let's break down where things have been going on. So the first bull run, right? Back in 2013, this is kind of the oldest one that we have on history, and there was a double tap, right? We had basically a good peak to start with. Everyone thought we were going bearish and pulling down, only go up and peak to the upside, right? This particular pattern here is very much in line with where we are right now, okay? So we were starting off with tracking the previous bull run, the 2017-2018 run, but then actually it turned into this run. We started like 2017-2018, but we went back down, and now we're looking to push back up over time. And if we take a look at what's been going on most recently, there were a series of lows, and then higher lows, and then parabolic, right? And hopefully that's quite clear to see. Now, we'll just zoom in so you guys can see that in a little bit more detail, because we are specifically talking about what was going on here with the 2013 range, right? So the initial pullback from the peak to the end, okay? So this is basically that initial kind of pullback that we saw with Bitcoin. We then went up to these, basically set these higher lows, okay? So this is lower but higher than the previous low. And again, this is higher than the previous low here, and then we went parabolic. Okay, so that's important to note that we are seeing this here within this 2013 data. This is obviously where we peak up towards the end of the year. This actually happened week commencing the 25th of November, although there was a little bit of volatility. We pushed right up before we actually went down and down and down, where we're setting lower lows, right? An ultimately bearish scenario. So what you saw here was basically the end of the year. This was just before December. Arguably, you could say it was the beginning of December, but the true peak was actually week commencing the 25th of November, right? So that's what we're using here. So basically, when we actually throw the Gaussian channel onto this, we can see that we actually started way down here, right? We're going to take our start point as basically just touching this area here of the Gaussian channel. Now, as we head up here, the first peak, we pulled back, but we didn't get close to the channel, but we did, a couple of weeks, almost got there, and then we went up and we went to that parabolic run. This entire bull run equated to 546 days, okay? So a pretty reasonable amount of time for the bull run to occur. Now, when we actually take the Gaussian channel off and zoom back out again, we'll just talk about what happened in the bear market, right? And what it was, specifically between the peak of the 2013 run and the peak of the 2017-18 bull run, okay? So there was 1,470 days from peak to peak, okay? Now, the bull run for 2017 started over here, and this was week commencing the 28th of December 2015. This is the point where we triggered the bull run. At least that's what I'm going to call it. And this actually comes in at 714 days from that point down there to the peak of the bull run in 2017. Again, we throw on the Gaussian channel. And what we take a look at here for this piece is, if I just make this a little bit bigger for you guys, we obviously went into the bear market through 2013, 14, into 15, finishing 2015, going back into the Gaussian channel, and we're retesting this area, right? So this is where we triggered the bull run, basically just pushing past this area here, and then basically we can start to see that we're above the Gaussian channel all the way to the top, okay? And we had the pullback and bouncing, and then we obviously entered the channel, went past the channel and went underneath the channel, okay? So this is where the bear market started, okay? So what we see here is actually, bull run to bull run, finishing, a week commencing the 11th of December for the 2017 run. So again, that equated to a pretty reasonable amount of time, 1,470 days, right, from peak to peak. Now, what does that mean? Well, we obviously went down into a bear market. I think many people are familiar with this. Over here, went underneath the Gaussian channel, and then we started to actually go up above this area just here. Like this should have been technically the bull run start, but we did actually come back into this area here during the pandemic at the beginning of 2020. Okay, so all in all, the end of 2019 was pretty interesting, and we started to come and get some traction up into kind of June time of 2019. And then we started to see some interesting things happen in the world. Although we struggled, basically everything kind of collapsed around 2020, specifically early 2020, which is what you saw here. So we kind of have to write that off, right? We have to say that under normal circumstances, we probably would have just continued a good run to the upside and probably would not have come back into this area. So it's a little bit hard to actually analyze, but we do understand that we set this new random low area here, which was unusual at the time. That being said, once we kind of got things established again, we started to see us rise right back out of here. And again, this is where the bull run started. Okay, and again, you could argue that this was delayed, arguably, because the bull run, you could have argued, started over here, but actually, really, you want to kind of say that it actually started above the Gaussian channel if we're using this indicator in the same way that it had done previously. So we are starting it here, which would mean that we've actually been running this bull run for only 413 days, whereas previously we had the 714-day run when we had a 547-day run, 46-day run. So this would be an incredibly short bull run if we were to say that it ended now, but obviously we're talking peak to peak, right? Which would actually have meant that we would have only had a bull run that lasted 266 days, which would be very, very different to what we've seen previously, right? And in fact, that would have been more in line with what our expectations would have been from the beginning of our previous kind of 2013 run, right? If we take a look from peak to peak, that would have been 329 days, right? Just from where we started the bull run to the very first peak in 2013. So ultimately, you know, I think this isn't too short of a period to think that we've actually peaked out. So for me personally, I think we've only actually, you know, seen 413 days of this bull run so far. Now, when we actually get into the Gaussian channel on the weekly chart rather than that 5-day chart, we get a different piece of analysis. Okay, so basically what we look for in the Gaussian channel is breaching the support lines. There ultimately are 3 of them. We have the top line, the middle line, and the one at the bottom. Okay, the one in the middle is the strongest support that you should find. And again, we are in a bull run normally bounce around off of the top line just here, for example. Okay, and if we actually go into the channel, there's a high probability we won't come back out of it, and we'll actually slip down into a bit of a bear market. Okay, at least historically speaking, every time we've come in, we've kind of bounced around the middle line and then we've tumbled out. Okay, so even back in the 2013 model, you can see you come in, you bounce off the middle line, and then we fall down. Okay, so what we're seeing so far in terms of this particular bull run in this cycle is actually we haven't actually gone into the channel just yet on the weekly chart. And this is a key thing to indicate, because although we are seeing these pullbacks right now, the Gaussian channel is very much intact and it hasn't failed yet, and not on the weekly chart, not in the same way that we have the 5-day chart. Okay, so right now we can see that we were bouncing around. We had a wick here. This particular candle, week commencing the 12th of July, came down. We wicked into the channel, but we closed the body just above. And then the week after that, we moved right on out. Although we were wicking down lower, we closed above. So there's no closed candles inside our Gaussian channel. Okay, so right now we can pull back significantly and still stay outside of this channel. And this is a very big bull signal, because this is what looked like what was going on in 2013. So if I shoot on back, if I come back over to 2013, what we saw here was basically coming down into these areas here, a low, a higher low, a higher low, getting close to our Gaussian channel, but never inside it. Admittedly, there were no wicks going inside, but we got close nonetheless. So what we're looking for now is this parabolic run to the upside when things do eventually line up. We can see that there are a couple of areas here where we wick into it, but we continue to stay above it before we go back down. And likewise, we can take a look at where we were over here. We were bouncing from the line before going back in. And ultimately, this is where we are, right? We're here. And you could argue that you're going back down. But again, taking a look at the time frames, they just do not simply line up for me personally. And I do think that we are liking to see another higher low get set, where we then start to see a parabolic run to the upside, where we finish the bull run approximately around the 20th of December, week commencing. And this would be because of the 1,470 days time frame between the two bull runs. If I actually just pull that back in line there. Okay, so taking a look at the peak to peak that we've seen previously, 1,470. If we do have another 1,470 peak to peak scenario, then that would be putting us at around the 20th of December, pretty much in line where we had been previously in the 2017 model, where it was 11th of December or the 25th of November in the 2013. So we take a look at the consistency of the time framing. We know there's a cycle here. Again, the stock to flow model is also lining up very nicely, and the Gaussian channel has not failed under this weekly scenario. So taking a look and taking everything into account, including everything that has been going on with Glassnode, the inflows, they are definitely not in there in the same way that we normally see and expect a sell-off event to occur. So what is happening right now is over the counter. It's definitely not involving too many exchanges, and there doesn't seem to be a huge inflow onto Glassnode here, so it actually indicate to us that there is a problem with Bitcoin. We take a look at the stock to flow model. Again, everything is in line with the stock to flow model there, and again, you know, we take a look at everything that even Plan B talks about in terms of this stock to flow model here, what his expectations were of BTC during the month of September, seeing the lows come into exactly where he had predicted them to be, and what his expectations are for October, November, and December. Overall, I'm incredibly bullish right now until we actually see this Gaussian channel on this weekly chart potentially get invalidated. I am going to be keen to see if we actually do continue this downward trend. and whether or not we do end up setting those higher lows that I am anticipating us doing. And if we do see those higher lows continuously set, we are going to be in for a bullish run towards the end of the year as we look to peak Bitcoin's bull run towards the end of December, in my opinion. Hopefully, guys, you have found this video useful and informative. If you have, hit the like button. I really do appreciate that. If you are new to the channel, then do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here. With this said, done, and out of the way, I hope you all have a fantastic day, and I'll catch you all in the next one.